What do you make of the report?
It's interesting timing, Caroline, because the Fed's been looking at this for quite some time, but obviously in the context of the last few days, it does make news. And the idea that they're putting out a paper on this is designed to reassure people, I think, that the Fed is deeply involved in studying the issue of whether you want to call it cryptocurrencies or digital payments. They're doing that. What is really unusual is that the Fed's gone to the extent of releasing a video press release starring Jay Powell, the chairman of the Fed, telling people what they're trying to do. They're trying to create the fastest payment system possible, and they already have that underway in many ways with their Fed Now system coming online in 2023. And so the Fed is going to be looking at whether they can assimilate into the digital world and whether they need to. Here's a quote from Jay Powell. To help stimulate broad conversation, the Federal Reserve Board will issue a discussion paper this summer outlining our current thinking on digital payments with a particular focus on the benefits and risks associated with CBDC in the U.S. context. That's, of course, central bank digital currencies. And I think it's important that the Fed does see a lot of risks in this.
They see a lot of risks for this, but we've also seen other central banks in other parts of the world already move on this, or at least begin the research process on this, Mike. I am curious as to whether there's a discussion to be had here about the dollar, the actual real dollar's place here as a global foreign reserve, and whether the Fed actually sees digital currencies as a threat to that.
They don't see digital currencies as a threat to that because you notice that almost all of them are tied to the dollar. The dollar is still the reserve currency, and they don't see that going away. It's more a mechanical system of what is a dollar. To us, a dollar is a piece of paper that we believe is worth a dollar. And that's what the idea of a digital currency would have to be. Jay Powell, in his video statement, goes on to say that the digital currencies we've seen today, these days, don't have a stable value. You can see that in the wild swings of the last couple of days, and therefore don't make a very good payment system. Now, stable coins, which if the Fed went into that business, we would have, would at least do that. But the problem is then you bypass the banking system because the Fed owns all the currency. And if banks don't get deposits of cash, they can't make loans, and you take the economic functions of the banking system out of the economy. So there are a lot of things to be looked at in here that a lot of people may be not thinking of. That's why the Fed is deeply engaged in this research.